Hey everyone, welcome to Good Till Canceled, our weekly market rundown. We haven't been have a video in a few weeks. It's been kind of slow news wise. However, we do have some more exciting personal news to share. Chris, you had a great week last week, huh?
Yes, I did. I had a very good week. I passed on Tuesday, the level 2 of the CFA program. So I'm very excited. There's one more level to go.
Great. For those of you
Um,
who don't know, that's chartered financial analyst, not certified financial advisor.
Correct. That's correct. So Alex and I are both
Mhm.
certified financial planners.
Correct.
And I am also pursuing the CFA. So there's 3 levels to that. And I'm
Yep.
just completed the second level, got this pass, did well. So I'm excited about that. It was a long process because of
Yeah.
being postponed twice due to COVID.
Yeah, and that's great. I mean, yeah, the CFA is probably the most prestigious accreditation in finance. So that's going to be great for you and for the firm in general to get that.
Yeah, well,
Hopefully,
yeah, it's up there with one of the harder tests,
yeah,
I think. But congrats to all those who passed, and level 3
yes,
just came out, so I got the news from a couple friends that passed. So congratulations.
congratulations.
I then parlayed the level 2 results,
Hmm.
and on Friday I got engaged.
Yeah,
So
well,
a big week for me, and it
yeah,
was a lot of fun. A lot of friends and family came out, so it was really nice
yeah, yeah.
to
You
see
really
everyone.
pushed all your chips in the table that week. It was all or nothing, right? You either, if you fail
Yeah,
and she says no, it's
yeah,
a horrible week, but you went the other way. So good job, congratulations.
yeah. It could have been bad. I could have failed, and then she
Mhm.
said no, and I only date winners, or I only marry winners, and she
Yeah.
left me. So,
No.
but solid week. Can't complain. Very
Yep.
happy.
All right. Well, let's get on to some of the news in the investment slash financial world.
Yeah.
We got the first thing, obviously, the big news this week. The Senate passed their infrastructure plan.
That's right. Yeah, some of you may have seen that. Uh, Depending on the news source, anywhere from a trillion to $1.3 trillion infrastructure bill. What really happened was they passed an additional $550 billion. So pretty bipartisan vote. So 69-30 in the Senate. So this will now move on to the House. So it's not actually done yet. But this is pretty far down from the 2.3 trillion that they were originally trying to push through back in the spring. One of the reasons that I mentioned the 1 to 1.3 trillion dollars was because I didn't actually realize this until I was reading up more on it. They actually normally allot $700 billion for highway and other infrastructure projects every year. So really, this is just a kind of an additional surplus to what they would normally do every year.
Yep.
So it's pretty interesting. It includes they're talking about $110 billion in new spending for roads and bridges, 73 billion for power grid upgrade, 66 billion for rail and Amtrak, 65 billion for broadband expansion, and then 55 billion for clean water and 39 billion for transit. So a pretty all-inclusive infrastructure plan that is going to again put a lot of money into the system, a lot of money into projects. I think that they're going to be doing a lot of clean energy type things as
Yeah.
well.
Yeah. It looks like I know they're doing about 7.5 billion is dedicated to building additional charging stations for electric vehicles. Another 7.5 billion would help fund swapping out current school buses and ferries with lower emission replacements. It's and just in general, some another 50 billion for making infrastructure more resilient on both cyber attacks and natural disasters like floods and wildfires. So just a lot of that, climate change, electric vehicle, lower emissions type of things going on in this deal as well.
Yeah. So this is just obviously more money in the system.
Mhm.
You'll get a lot of questions
Yep.
going back to obviously how are we going to pay for this the debt's pretty high.
Mhm.
It's actually pretty funny. So the article mentions negotiators decided to rely on repurposing existing COVID-19 funds, delaying a Trump era rule on Medicare rebates, and receiving funds from past and future auction sales of wireless spectrum space. along with a series of accounting maneuvers. So basically, what that tells me is that they have no idea how they're going to pay for it, and they're just kind of winging it. But they've the Congressional Budget Office, who basically manages like the finances and figures out how much this stuff is going to cost or not, basically said that those payment efforts, as they are, would actually still come up short by 256 billion, or add $256 billion to the deficit over the next decade. So this is all in addition to another $3.5 trillion budget, or in addition to the $3.5 trillion blueprint that is kind of getting pushed through right now, or was approved by the Democratic Party. So talking about offering, paid leave benefits, universal pre-kindergarten, 2 years of free community college, expanded Medicare, covering dental, vision, hearing, things like that. And also adding a lot of other incentives for clean energy. So we're, again, talking about, this is pretty small, pretty small package compared to what, again, is still in the pipeline. I'd have to imagine that still gets pared down, but just another thing that has more money going into the system that's already pretty, pretty supplied with extra dollars, pretty strapped with debt, low interest rates. So it should continue to kind of be that extra little push that the economy needs. So.
Yep. Yeah. And of course, with all this spending you're seeing in the news, I mean, you can't get away from it. The word inflation is getting thrown around all over the place. We did have a CPI reading on Wednesday. The consumer price index increased 0.5%, 0.5% from June, and 5.4% from a year ago. Excluding the volatile food and energy components, the so-called core CPI rose 0.3% from the prior month and 4.3% from July 2020. So obviously, CPI has increased. It's something we can expect. The main reason why it's happening, obviously, it's a supply side issue, right? You're seeing supply chains are still having, trouble. There's a lot of bottleneck in a lot of shipping costs. So what's happening is a lot of these companies are facing increased cost. They are then passing it down to the consumer, us. That's just the nature of the beast of what happens when prices rise. These companies, they, instead of trying to take losses and eating their profits, they're going to pass it down to the consumer, and we're going to realize the higher prices.
And there's strong demand too, right? Obviously, a lot of people have been cooped up for 18 months or are starting to get out there and be able to have vacations and do some of these activities. And a lot of the inflation that you are seeing are in the services sector as well. So the Federal Reserve Chairman Jerome Powell continues to emphasize that, he believes that this is going to be entirely transitory. I don't see any reason that it wouldn't be. Especially with the onset of the Delta variant and whatever other Lambda variant going on, just how much everything is spreading. I can imagine that, even if nothing closes, people are still going to be a lot more hesitant to be doing stuff. I just know from experience, just people wanting to just still be outside. So as the weather begins to change, things are going to slow down. Also, a lot of this kind of comes from, I think you've mentioned this on previous calls, the semiconductor shortage that we're going through, that's going to be fixed at some point. So that's causing used car prices and new car prices to kind of skyrocket. And then, of course, like you're just getting the everyday consumer goods just going up. So like the Colgates and the Johnson & Johnsons and the Kimberly Clarks and all of those types of everyday products are just continuing to rise. What's interesting is that, and we'll post this, is that one of the articles, the Bloomberg article that we have, mentioned different types of price records for different goods. So over month changes, they talk about some of the, motor vehicle repairs and personal care services rising like 2.2% and 2.2% respectively. And those are the largest gains on record. And then interestingly enough, the largest month change that they list here is women's dresses. So I think that's pretty interesting that's one of the
fun fact about women's dresses. So when I was in college, we had an economist from Bloomberg come in and talk to us. and he basically said there's some obscure data that a lot of economists look at as almost leading indicators of how the economy is doing. One of them is women's dress sales, and jewelry. And the reason being, he said, is typically in the most American households, the woman is the chief financial officer, right? She is the head of the financial household, meaning that she dictates the spending, right? So if she's out buying herself dresses and jewelry, there's a good chance that they're spending as consumers. If she starts to pull that back, economists look at that as probably a negative, right? So that is funny that that's in there, but just it reminded me of that story, and I never knew that.
I think that's so interesting. I could definitely see that too, because from my experience, the women in my life have been very hesitant to wear a dress more than once. And it seems like every time that there's a big event that there's an opportunity to wear a dress, they have to buy one. So I can imagine if you're buying new dresses or spending money on dresses, you're probably going out and spending money again on something else. So I definitely.
When you see the girl wear the same dress to multiple weddings in the same year, hit the alarm button. We were heading towards a recession.
Right. Yeah. I'll have to start taking. Well, yeah, that's weird. Definitely take some notes on that. But that's super interesting. I think that's that's pretty good. So one of the other articles in the FT that we were reading, we're starting to see a boom in outsourcing investment teams. So what they're basically talking about is that most companies will have a small investment team to manage funds, but what they're actually doing is because of the recent treacherous markets and how spike in volatility and expected volatility and low returns moving forward, in the future, 5 to 10 years, the low return expectations, that they're actually moving money to these very large outsourced CIO teams with larger teams, larger budgets for research and, rebalancing and management of the fund. So they're seeing a lot of that going on. So interesting stats were $2 trillion of assets managed with full partial discretion by these outsourced CIOs at the end of March of 2020. So that's up pretty substantially, almost double from 2013. So the people that are actually managing the money seem to be getting larger and larger and larger. I think the BlackRocks and the Vanguards and these types of teams. There's Goldman Sachs has an outsourced CIO team. I mean, there's everybody basically has one now. But the half of all of these outsourced CIO mandates are for less than $100 million, according to Cerulli Associates. And Russell Investments estimates that 76% of institutional investors with assets under $10 billion have not yet outsourced their investment activities. So that's the target market. These people that have hundreds of millions or billions, so small endowments or college funds or what have you, where the teams are pretty small and maybe they're not getting everyone's doing a little bit of something different, where, in today's world, everyone can be super specialized, and you have a team where, this is a quant guy over here and that's all he does. And that's all he lives and breathes. And, you have somebody else over here who's doing all fundamental bottom up research or something like that. So, I think that market is going to continue to grow, and more people and some of these endowments are going to continue to kind of push money out to some of these outsourced CIO companies.
Yeah. And there are a few points in this article that I know we have also brought up in past episodes. AQR Investment Group estimates that a traditional split portfolio, so 60-40 stocks and bonds, in the next 5 to 10 years will return 2.1% annually after inflation. GMO asset managers are more bearish, thinking it'd be negative the next 7 years. They've been wrong in the past. We've seen that they've been bearish for a while, but it just goes to show, the need for these types of money managers. And, with these traditional, a lot of people thinking, low returns after inflation for a lot of these traditional asset allocations.
Yeah. Now Jeremy Grantham, who's obviously the founding manager of GMO.
Mhm.
I mean, they've been doing these 7-year forecasts for
Yeah.
15 or for
Yeah.
a long time, more than 7 years, and they've been pretty wrong for a
Yeah.
long time. Now,
But it's easy for these guys to just keep, if they just keep making the same prediction, when it comes true, they'll just be like, well, look, we told you so, right? They don't have to answer for being wrong, but they can come on and gloat when they're right.
right. I mean, listen, they're
Yeah.
successful people because they've been right,
Yeah.
at least more off. Well, they've been right on the right bets, and they've taken the right position sizing, but they're expecting, to give you an idea,
Yeah.
GMO is predicting for the next 7 years, a large cap US stocks to return almost -8%, negative, more than -8.5% for small US stocks. The only thing that they have out of all of these investment classes, so international large, international small, emerging market, and then inflation bonds, emerging market bonds, international bonds, and cash. They're even expecting negative real returns of cash. Well, that's to be expected. The only thing that they expect to actually be up is emerging market value stocks. They project to be about 3%. So I don't know. I don't know what else you do if everything's going to be negative.
Go all in on emerging markets and hope that they're right.
Yeah. Well, I
How
mean,
much, how much emerging markets do they hold? I guess is the question.
yeah, it'd be interesting to see
Be interesting to look at that, right?
how much advice that they take on their own.
On their
They're
own.
they're pretty big value people, but
Yeah.
he was the one that was saying that Tesla was a bubble because of you divide the market cap by the number of cars that they sold, and you were getting like
Yeah.
$10 million a car or something crazy.
Yeah.
But so I think the next article that we're talking about is pretty relevant, especially for the time that we're in.
Yeah.
There's obviously a lot of real estate transactions going on, so people buying and selling.
Mhm.
Regardless, it's good to know these types of things. And Alex, you've also just had a client recently that you had to discuss this with. So I got this idea basically because the Humble Dollar
Mhm.
has a blog and answers a lot of financial related questions, and they do a very good job of it. They actually just discussed this. So they were talking about, do you need to pay taxes on your home sale?
Right.
So
Yep.
walk us through that a little bit.
Yeah. So yes and no, right? So most likely no. There's an exclusion for home sales. So it's for, for single filers, it's 250,000, right? For joint, it's 500, meaning that if you have, that's gains, right? So if I bought a house for 300, right, and I'm married and I sell it for 800, right, I don't owe taxes on those gains. Those are excluded. There are some, things to be eligible. There's an ownership test. So you have to have residency. I believe it's you have to own and use your home for a period totaling at least 2 years out of the last 5. And there's also a look back test. So you can't have used the exclusion in the last 2 years, right? So, if you buy a home, you sell it, and then you buy another home, and if it goes up in value and you sell it again, you might not, you might owe taxes on that. Although good on you if you're buying 2 homes in 2 years and you have that many gains. You're doing something right if that's the
In
case
this market.
in this market, right? So, yeah, I mean it's something to think about. There's some other things too, like what is it here?
So actually calculating the gains is
Yeah.
pretty interesting. So it's not just your selling price minus your
Right.
purchase price, right? You
Right.
can actually include a lot of your home improvements and closing costs and purchase costs into the actual selling price. And that actually also reduces that gain as well.
Yeah.
But they also mentioned that if repairs were done as part of a larger remodeling project, they can also be included.
Yeah.
But more general repairs
Yes.
don't
Right. They wanted to, if it's added value, right? So, and it's the same thing with any other real estate investor, right? When you do things to add value to the property, you usually can add that, to your basis. So it gives you a little bit less of a gain when you sell. So yeah, I mean, it's definitely a relevant topic with how much home prices have gone up in the past year and a half, 2 years. You're going to see a lot of people selling their homes for, a couple $100,000 in equity and gains. Just know that you do have a pretty large exclusion there, but if you are looking at a big gain, definitely talk to your tax professional before, making any decisions, because, like I said, if you want to use this exclusion now, you might not be able to use it in the next 2 years. So it's just something to think about with that.
Right. That's interesting.
Yep.
And then I guess just a couple final points. We'll post. The IRS does a pretty good job of explaining exactly what meets these rules. Alex touched on it that for the most part, right, it's a $250,000 for single, $500,000 for married, and then you have the rules requiring surrounding how long you've actually been there and living there. And then obviously you have to actually have a gain, but there are some other like more nuanced rules, like you didn't have this wasn't part of a 1031 exchange, or part of you're not an expatriate or something like that. So we'll put a link to the IRS.
Not a really boring tax mumbo jumbo, right?
But we'll put a link there just so that you have all the information, because I think that I agree with the Humble Dollar that they do a pretty good job of kind of like a flow chart. If you do this, or you here, go here, and lays everything out pretty nice. So another news story to keep you kind of up to speed on what's happening, because I'm sure this probably affects a good amount of you. And we've basically beat the subject to death as the student loans. They extended the pause on the federal student loan payments and interest through January 31st of 2022. So originally it was supposed to end August 31st, and we talked about kind of how that's going to affect a lot of the people that haven't had to make those payments for
almost 2 years.
Almost 2 years, but now it's going to be more than 2 years. So that's just to keep up to speed. So again, no payments or interest is going to be collected on the federal student loan payments. Does not include private student loans. So, think about what you want to do with that extra money. Do you want to continue to pay down some higher yielding debt that you might have? Think credit cards, think private student loans that may be kind of floating rate interest rates. Think maybe you bought a house and you want to continue to put money into the house. You probably have a pretty low interest rate, or invest that money, or just pay down the student loans. You'll pay 100% of the principal off, or just save that money and then invest it, or pay it off right before the January 31st kind of comes around.
For the people that have the student loan forgiveness program, so that's part of the Fed loan forgiveness. Those are people that are actively enrolled, right? You work for a nonprofit. So teachers, right, that work for schools, healthcare workers that work in hospitals. This still to the extension, you've had to make no payments, and every payment counts towards that 120 payment forgiveness. So I wouldn't be making any payments if I were you, if you were in that program. Just a thought.
If you have student loans or you have a question about it, please don't hesitate to reach out, or talk to a financial professional and get some advice, kind of what to do. Like we've stressed before, having second opinions of people that you trust certainly goes a long way of making much better decisions over the long term. So it's pretty just another thing, because I still think that the student loans are just mind-boggling. This did mention that 20 million borrowers currently have their loans in forbearance, and before the pandemic it was 3 million. So it's just it just goes to the idea that I have, that so many people have so much extra money that they're not paying off right now. And that's driving a lot, I think, of what we're seeing in the housing market and some
demand,
of the
spending, right?
So it'll be, like I said, I continue to say, it'll be interesting to see when people have to start paying it back. They did specifically say this is the last time that
they did
this.
the final one, right?
This is the final one. So we'll yet to be seen, but we'll see. And then last story, hackers once again getting at $600 million in digital tokens and crypto, according to a crypto network. So Poly Network, which apparently links some of the world's widely used digital ledgers, like Ethereum and Binance Smart Chain and the Polygon network. I think had $600 million worth of tokens and crypto tokens stolen over the last week. So that's just incredible to me. And that's
Well,
part of kind of this decentralized finance movement. And they go back to, and they say this is basically on par with the exchanges CoinCheck and Mt. Gox. Now, some of you may not remember what Mt. Gox was, but this was in 2014, and this was a Bitcoin exchange that basically just went out of business and lost 850,000 Bitcoins, and just lost them. The amount of money that has just been lost or stolen in crypto, is pretty incredible. But one of the interesting things is, because this is part of the decentralized finance kind of movement, it's kind of a blow to that, obviously, having it happen on that, people talk about it. Well,
you've been told it was impossible for Bitcoin to get stolen.
Right. Or that, even having decentralized things, it makes it safer in the sense that, everyone's watching it. But now that it's stolen,
who's in charge?
I guess who's responsible for finding it? I guess, how does that work? So that's one of the interesting kind of developments here, I guess, that we're going to see over time. I can't imagine that this is good for that movement, but that's basically been the big push, like the big finance movement, the third movement for decentralizing a lot of this stuff.
Right. Yeah, it hasn't been, you can argue it's been a great year for cryptos, right? There was a big rise, there's a big drop. They're obviously up on the year, but it just seems like every week there's something new to make you kind of go, huh? There was the fact that Bitcoin can get tracked and traced, right, when they got it back from the hackers, and now it can get stolen by hackers. The SEC I think they put a bid in to try and regulate it, right? Like recently, they basically have asked Congress for permission to explore regulating Bitcoin and cryptos in the future. So there's, the three things that we're told: decentralization. When you have that, you get the Wild West when things get stolen and no one's responsible, and people are just everyone's gonna look at each other and go, I don't know, not my problem. If it's getting tracked, it is what it is. So,
well, this wasn't just Bitcoin. This was, I guess they said the tokens were consisting of 270 million on Ethereum blockchain, 250 million on the Binance Smart Chain, and 84 million on the Polygon network. Again, I'm not very familiar with what those are or how they work, or I just know that this is going to move regulations forward, and oversight is going to increase from financial regulators just because of this. And this is going to become kind of a blow to the decentralized finance. For example, they actually talked to some of the people from this Poly network, and they say, we will take legal actions and we urge the hackers to return the assets. It's like,
please,
it's all they can. That's all.
Please don't rob me.
Yeah, please give us the money back. So it is, no one really has anybody to blame, I guess, other than the total, all the people that kind of work on this decentralized, blockchain or area. So I guess it'll be interesting to see how this all continues to play out. But I continue to believe that the crypto space is probably here to stay. But I wouldn't be shocked if one day we just, 30 years from now, people were like, could you believe that, those people were buying these tokens, Shiba Inu tokens, and
we were told they're completely worthless and they make infinite amounts of them, but Elon Musk told us to buy them.
They were still worth more than this major car company called GM and Ford or something. So,
we'll see. Time will tell. All right. Well, that's all we have today. Any good plans this weekend, Chris? You guys celebrating your engagement or anything? I guess you already did.
We already did, but we'll be down the shore, finally taking a vacation this week in Ocean City. So I'm excited to get the toes in the sand and
there you go.
Do some later reading, non-textbook reading on the beach. So.
There you go. Yeah, I took my vacation entirely too early this year, back in like mid-June. So I just feel like it's just been dry. Need another
Well,
one. I also have a 3-week-old baby at home. So
yeah, we're friends with a bunch of teachers and they've been doing all this stuff all summer, and it's like
we're
middle
going
of
back to school
August
in
and we
like 2
haven't done
weeks.
anything. Yeah, I know. Well, yeah, I mean, our summer hasn't even started yet, and
I know.
theirs is winding down.
Yeah. So, all right. Well, everyone, again, please like and subscribe if you have not. We would really appreciate it. And we'll see you next week.
Great. Thanks, guys.